Hi traders, it's Niall Fuller here from learntotradethemarket.com and welcome to another Trade Setups video. Today I'll be talking about the price action on the S&P 500 daily chart, that's the US stock market index. I've spotted what I think is a good trading opportunity to go long, and I'm going to go over the analysis behind the trade setup just to help you guys get a little bit more of an understanding of how I do things and how I come up with my trading decisions. I only use price action analysis. That is a naked price chart, a clean price chart with a white background, black and white bars or candlesticks, and horizontal levels. I don't use any indicators or anything fancy. Now let's get into the setup. First thing to note on this chart is over the last year, we've really had a sideways pattern. It was only until August this year that we decided to have a breakdown out of this long-term consolidation. We broke down all the way back down to this long-term support from October 2014, almost tested it exactly, and then rallied all the way back up into this resistance area. You can see it was support here on numerous occasions, and then on the bounce we actually held there and it acted as resistance. Obviously, with basic technical analysis, we know that previous support becomes new resistance. So the market was holding there around that 2000 level, and then we sold off again. But we didn't end up testing that recent low, and we didn't even break through it. Instead, the bulls came in and pushed the market straight back through that resistance, and we're now in a new leg higher. So the bias, the way I see it, is to the upside, and I want to be trading longs. I want to be buying the market. Now, there isn't a lot of price action evidence to get me into the market right now, but what we are doing here is analyzing the overall picture, and then we're going to anticipate the next trade. We can just see here that the market is edging up against that 2060 level, and that's a level that we had identified there. This line is still on the chart. So when we zoom out, we can place the levels. When we zoom in, those levels are still relevant. There's also another level here at 2011. You can see the market found resistance, moved up to that area, had a little pause, and then broke through it, and then we held it again here. So this area here at 2011 is also very significant in the short term. So the way I see it here is if the market can hold above this level at 2011, we are poised for more upside. Now, what I'm going to do is anticipate a trade. We don't have a signal that I would put money behind yet. We're not really at a level where we can define our risk correctly. What I'll do is I'll wait patiently for the market to rotate back down towards 2011. We might only get a pullback to that 2030 level, which is also a very key level. I'll be waiting for evidence to get me long via a price action signal, and that might come in the way of a pin bar, a fakie, an inside buy, a false break, anything like that. If we see something in this area between 2011 and 2034, I'll be looking to get set long and riding the market as it breaks to fresh highs. Now that might take up to 2 weeks to happen. We might actually pop up first and then come back down. The idea is that we have identified that the market is generally trending up. We'll wait for a pullback, and then we'll eventually see the market continue in the same direction. Now, just a quick word on stop placement. I think the logical stop placement on this would be below this swing here, and even better yet, below 1980, which is well below that swing low there. So if we were to wait for the market to pull back, have a confirmation, we could enter in this area here, have our stop below here, and targeting the recent highs around 2100 up in this region here, that would represent a 3-to-1 risk reward. As the price action unfolds from here, we'll update members in the daily trade setups video. Until then, take care and good trading.